Welcome back, everyone. After several requests, I've broken down my full Notion template, which I use to track and organize everything trading related, from my weekly analysis to my day-to-day journaling and even my backtesting. What I've created Notion for is the central hub for my trading for everything that I'm doing. The only thing that is not in Notion is my data collection, and that's what goes into TradeZella, but that's an entirely separate video. This is going to deal with Notion, how I journal, log, backtest, and everything that goes into my trading and how I organize it. I will share my entire weekly routine and what I do each day as a full-time trader. What I've learned in trading is that the most successful people have consistent routines that they execute on. Many of you guys, like me when I first started, were not bringing anything consistent to the market. So the market isn't going to reflect anything consistent back to us. So if we're doing random shit every week, doing different things, different strategies, sometimes we're journaling, sometimes we're not, you're not doing anything consistently. So why would the market reflect consistency back to you in terms of consistent gains? It's just not going to happen. So what I've learned is that the best traders, the professionals, they have routines, they have processes that they follow every single week. And that's what I want to share here with you guys. And once I was able to develop these routines and really get organized with my trading, this is what allowed me to become a full-time day trader for the past 2 years. And it was done through repetition of doing the same things day after day, week after week, month after month. Then once I became a professional, then I was able to get into consistent money, and my goal is for you to do the same. So I want to touch on the biggest thing that allowed me to become consistent. And it was actually becoming a professional first. Then I was able to get consistent results. A lot of people think, well, yeah, I'm just going to get a payout, get consistent, and then I'm going to become a professional and do all the right things. That's not how it works. If you keep doing the same things, you're going to stay in the same place. But if you do different things, you put in different inputs, you'll get different outputs. And it's the same exact thing with anything in life, but especially in trading. So if you become a professional, if you get organized, you get routines, you get disciplined, you can start seeing consistent results, but it's not going to be the other way around. There are no shortcuts. Stop looking for them. This is why many of you guys are losing your ass. You're trying to look for an easy way, an easy strategy, copy trading some person or watching a short workshop and think you're going to get everything you need. And it's the exact reason why you're not seeing consistency, because you're looking for shortcuts. You're looking for the easy way out. You think you're going to get some easy strategy. You don't have to journal. You don't have to backtest, and you're going to be the exception to the rule that doesn't have to do this. Unfortunately, if you stay in that mindset, you're going to keep getting the same results that you've been getting. And I don't want that for you guys. Lazy will not make it. So if you are lazy, if you're not willing to put in the work, if you're not willing to journal, to backtest, to be diligent, click off this video. You're not ready to learn yet. My goal is for those of you guys that really want to make this into an income stream, you want to turn this into a business, and you want to improve your life with trading. I'm making the video with those people in mind. If you're lazy, if you still think it's get rich quick, or you can copy someone's signals and get consistent, then this video is probably not for you yet. But keep doing that for a little longer. You'll be ready to come back to this video later on. You must be organized, disciplined, and hardworking to succeed in these markets. Of course, everybody knows that, but what does that actually look like? What does it look like to be organized, disciplined, and hardworking so that you can be successful? And that's what I'm going to show you in this video so that you can copy the same routine that I use. Are there different ways to get successful in trading? Sure. I'm sharing what's worked for me, my team, and those that I coach and actively work with. So I want to go into an overview of the Notion template. So this is a general overview of my Notion. And what we're looking at here is the 2023 trading journal. We're going to look at 2023 up to 2025. One of the things that's so cool about getting organized in Notion and being able to track everything you're doing is you create an awesome study resource for you. For me to be able to go back to 2021, 2022 and look at screenshots, backtesting logs, my journal reviews, things that I was thinking of at the time, I'm able to see how much I've grown. And then looking at the charts, looking at my reflections from before is such a cool experience to go back to, because I can also see how far I've came from that point. So there's tons of benefits to being organized, tracking everything you're doing so that you can even go back months and years later and backtest what it is that you were doing, what you were looking at, your annotations. And then with the new set of eyes, you can go back to old data and take a lot of insights away from it. So going into this, one of the biggest opportunities that you actually have is to create the best trading book that ever existed, and it's going to be in your own writing. So this is an example of 2023, and I can go back to any one of these respective months and look at each day within these months. I just wanted to show you what you can do if you do this consistently, that you'll be able to create such an awesome trading resource for yourself. This is 2024, so is same thing with 2023. I can go back to 2024 and look at all the respective months and days within those months, which again is a very cool experience to be able to go back and look at certain months, certain days, and things that I want to backtest for future reference. And then that takes us to 2025. So this is my 2025 trading journal. It's actively being built. That's why it stops at July. So what we're going to do is look at the second month of June. So we're looking at June here. So when you click June, it opens up a new page that has everything divided by week. So I have it divided by year, month, and then week. And then we're going to look at week 4 specifically, which is one of the most recent trading weeks. So when you click into week 4, now you can see the process that I'm doing week to week. Everything starts with the weekly outlook. That's what I'm doing on Sunday with you guys. And then you can see weekly outlook all the way to the weekend reflection. So now I want to go into what I'm actually doing week to week, and we're going to start on Sunday. This I'm doing with many of you guys on YouTube live every single week, sharing what I'm looking for from the economic calendar to top-down analysis to inter-market analysis. And that's what I'm doing on Sundays. So first things first, on Sunday, as part of my weekly outlook, what I'm doing is I'm taking note of the economic calendar, because I want to see when is the high impact news scheduled, when is there no high impact news, and I'm using this to create my schedule. So I know what my schedule is going to be in the next trading week on Sunday by looking at the economic calendar. So I'm already planning what days I'm going to be trading, what days I'm looking for explosive price runs, and it's all based off the economic calendar. So this starts everything for me. From there, I then go into top-down analysis of the markets I'm trading, which for me is NASDAQ and S&P. So I start with monthly, go down to the weekly, daily, and then I'll go into the hourly chart. And what that does is it sets the tone for the week. So I have my bias, higher time frame, what I'm looking for, and then when I get to my desk Monday, Tuesday, whatever day I'm going to be trading, I'm already ready to go because I've done the preparation on Sunday. One thing I want to add is you can do this whatever day works for you. Because I'm already going live on YouTube, it makes sense for me to do it on Sunday just before that live stream. But if you want to do it on Friday after the markets close, or Saturday and just take an entire day off of the markets, it doesn't have to be 7 days a week, every single day involved in the markets. You can do this on Friday or on Saturday and not have to worry about markets Sunday or Saturday at all. So it just really all depends on your schedule and what's more convenient in your personal life. But I'm going into a top-down analysis so that, again, it's framing the bias so that when I get to my desk to trade throughout the week, I'm already ready to go, knowing what I'm looking for and what I want to see in price action. So I'm not having to scramble around the morning of trading, and I'm already prepared. I can show up to my desk calm, cool, collected, knowing what I'm looking for because I've already done the necessary preparation. And one of the things that you'll see is confidence comes from preparation, especially in trading. Anything you look at, right? Basketball, football, any type of athletics, any type of skill, confidence comes from preparing the right way. So if you're not confident in your trading and the trades you're taking and what you're looking at, it's probably because you haven't done enough preparation. So what I'm looking at on the weekly chart is what's the direction of the weekly candle. And these are some of my observations. So I'm staying with the bias of looking for higher prices as long as we remain supported inside the weekly bullish order block. So we have a down close candle here, and equal highs that I'm looking for is the draw. So equal highs above market price are the draw. So I'm expecting the market to trade higher as long as the market finds support inside this bullish order block. So the bias for the week is bullish. And then from there, dropping down into the daily chart, this is the week that we had tensions rising in the Middle East, likely to allow NASDAQ to leave the consolidation. So just framing my thoughts for the week, going into it that now that we've been in a consolidation, because the escalation that's happening in the Middle East, I was expecting this to be the catalyst to take the market out of this consolidation. And then we can see for market structure to remain bullish, we want to see these key lows not violated. What key lows? In my analysis, this is an intermediate term low. This is an intermediate term low. So as long as market structure is going to remain bullish, intermediate term lows should not be taken out. So I'm looking at what's the weekly bias, what's the daily bias, what's the market structure that needs to hold for me to continue to trust my bias. And this is what I'm doing on Sunday to prepare for the coming week for my daily bias, weekly bias, so that then when I'm dropping into my lower time frames, I know what it is that I'm looking to do. And then the last component to what I'm doing on Sunday is intermarket analysis. So again, in summary, we're starting with the economic calendar, then top-down analysis on the market that I'm looking at, but I further want to support my analysis with intermarket. So I want to look at other assets to support the bias that I'm looking for. The main three that I look at is dollar, bonds, and indices. So first thing I start with is the US dollar, because that's going to give me the tone for risk on, risk off. All risk on, risk off means is if the market's risk on, that means dollars selling off and risk assets are going higher. If the market's risk off, that means investors aren't wanting to actively take on risk. So capital's flowing into the dollar and flowing out of stocks, foreign currency, and any risk asset. So intermarket analysis sets the tone for what I want to see in the asset that I'm looking at. So I start with intermarket analysis with the dollar. So dollar is bearish here. And if you see the weekly chart, Dollar remains in a sell program. I'm not trying to pick a bottom in a heavy market, and the market is risk on, which means I expect the dollar to sell off. And what you can see is this is a weekly order block that I'm expecting the market to drop down into. So now how is this helpful if I'm trading NASDAQ? Well, if I'm bullish NASDAQ, I want to see dollar remain bearish, because if the dollar remains heavy, that's going to allow the stock market to trade higher in a risk on scenario. So this further qualifies what I'm looking for in NASDAQ. So it's not just looking at, okay, what's the order flow and what's the market structure on NASDAQ? I also want to see dollar and intermarket analysis further confirming what it is that I'm looking for. And now going into Monday through Friday. So that's what I'm doing on Sunday to prepare for the week. But like I said, it can be done any day as long as you're preparing ahead of Monday. So now what am I doing Monday through Friday? Monday through Friday are obviously the trading days of the week. Not that I'm trading every day, but this is what I'm doing on the days where I'm trading Monday through Friday. So first things first, we're going to click into Thursday, and that's going to take us into one of my daily reflections. And there's a few main things that I'm doing on these reflections, and it's consistent every single day. So we see here Thursday, the first thing I'm asking myself after every trading session is, was the trading plan followed? And my goal is to get yes after yes after yes after yes. Because what happens if you follow a trading plan consistently? You're not going to blow your accounts. You're not going to over leverage, and trading becomes really easy. Easy in the sense that you're showing up, following your plan, and it's not stressful. It's not, oh my gosh, am I going to blow my account? Every trade's a big deal. You don't think like that when you think like a professional and you have an actual plan. So what my goal is to follow my plan consistently. And an example, even with those that I work with directly, I take on some clients and we talk, and then we get on the same page in the beginning. And then we say, okay, well, how many days are you following your trading plan? Some don't even have trading plans. So that's obviously the start, but some do. And then we look at, okay, well, how often are you actually following this plan? And then for some, it's 10 days out of the month, they're consistently not following it. That's fine. That's why we're getting to work. From there, I then say, okay, we need to get that from 10 days of violating the trading plan down to 5 the next month. And then after that, we need to get it down to 0. And then what do you think magically happens when someone follows a trading plan consistently? You stop blowing accounts, you stop being inconsistent, and you start getting consistently profitable, almost like magic. So trading plan and adhering to it is extremely important. And one of the things I'm a firm believer in is if you track something, you're thinking about it. So if you track, are you following your trading plan? You're going to be thinking about it every day. Like, yes, am I following my plan when you're at your desk looking at the candlesticks print? And your goal is to be mindful of stacking as many consecutive wins as you can in terms of following the trading plan. And then the next step is, after I identified if I followed my plan or stayed within the rules or not, I'm then looking at a reflection of my performance. So when I reflect on my performance, I'm talking about, what did the day do? Did I anticipate it well? And did I execute on it well? And then what could I improve for the next time? So in this example, textbook day, the daily and the weeklies reaching for the buy side liquidity at the all-time highs. So we're trusting buy models. How do I know that? Because I've already done the necessary preparation on Sunday to know that my bias is bullish. Once we dropped at 9:30 below the midnight opening and into sell side, this created an easy read for the low of the session to ride the distribution higher. I entered early inside the lower half of the first presentation fair value gap, getting a beautiful discount entry after the Judas swing, which is rapidly repriced away from. And I took the trade off with the low-hanging fruit opening range high at 45 points in under 5 minutes. My trust in my analysis and ability to long into the Judas swing, which is the fake run, has been a game changer in allowing me to trade the easy liquidity run. So one of the things that I've been doing to improve my trading further is I want to get long as close to that low of the day as possible. Traditionally, let the market drop, let it displace, wait for confirmation. There's nothing wrong with that. That makes money as well. One of the things that I'm improving on is I want to get in as close as I can to the low of the Judas, because that's going to create the most explosive price run away from it. So that's just something I'm noting, and just so you're on the same page. And then another thing that I'm reinforcing here is that the 9:30 to 10:30 sweet spot has been perfect for me to refine my focus and give me plenty of other time to build other aspects of the business and keep my mind sharp for when I'm on the charts. The more I scale, the more I learn, less is more. So I'm reflecting on my performance, what I did, what were some main takeaways from the day. And one of the things that I'm continuously reinforcing to myself is that as I scale my trading and grow into 5 figures, 6 figures of capital, and I'm not talking funded accounts, you learn that less is truly more. You don't need to be in there every day. You don't need to take 10 trades every single day to make consistent money. And these are just some of the reflections that I'm having to myself. And what I've actually been doing is trading even less. And the less I trade, the more sharp I am on the charts, the less chance of me going on tilt, the less chances of me over trading and doing dumb shit. So some of the things that I'm reflecting on is how effective am I on the charts? Am I spending too much time? Am I getting more efficient? And those are all things I'm doing to further improve my trading. My goal is to make more with less time actually on the charts. And then after reflecting on my performance, I'm backtesting the current trading day. If you haven't already seen my backtesting video, check that out. The link will be above here somewhere. Every single day you need to be doing this, and it shouldn't take that long. It's very simple, and I'm going to go through another iteration of what backtesting looks like. So I'm starting from the higher time frame. So we can see here the daily chart. I'm noting that the daily liquidity void in the buy side was the draw this week, just as I covered in the weekly outlook. So that's setting the daily buys. We have a daily candle trading higher. Then from there, I'm going down into the hourly chart. So the daily bias is bullish. So what are we going to look for on the hourly chart? Higher prices. So we see we got above a daily fair value gap here, which is that inversion fair value gap with the yellow rectangle. And then you can see on the hourly chart, we got above it using it as support, rallying higher. And I'm looking for the market to expand higher based off my weekly and the daily chart. So we create a fair value gap here inside this intermediate term high. Whenever you have fair value gaps or PD arrays inside of a key market structure level, those are going to be the most effective ones. So that's why I'm extending this reclaimed fair value gap through. Not that important, but just so you understand why I'm marking these levels. So I'm expecting the low to form here on the hourly chart and then for the market to expand higher. And from here, I'm dropping down into the 15-minute, marking out the 9:30 opening price, and I'm doing the same things every single trading day. At 9:30, they sink the market lower in the sell side, below the 9:30 opening and below the midnight opening. So here I'm just annotating beautiful delivery, dropping into a discount below sell side for the next repricing into the higher time frame targets, which is what? The weekly and the daily bullish bias that I covered at the beginning of the week in my preparation with also a bearish dollar. So a lot of things supporting why the NASDAQ should trade higher. And then when you know where the market's going, you wait for very generic things. If we're bullish, we want to see the market drop at time. And then we're going to look to position ourselves accordingly. And then last hour makes the high of the day. That's also something that you consistently look for as well. If the low of the day is going to form near 9:30, the high of the day is going to form from 3 to 4 o'clock. That's time and price theory. So I'm continuously reinforcing what the market's doing every single day. I don't do this as much anymore for study purposes. I do it a lot more now to just keep me sharp with price action. But this is what I did every day for years to get to this point. And like I said, lazy is not going to cut it. If you want a skill set where you can make as much money as you want from your laptop, you're going to have to put in some work for it. Because if it was easy, everybody would be a millionaire off their laptop. And everything is positive. I also want to note that as well. I'm not going in here saying I'm the biggest dumbass ever. I can't believe I didn't see this. I should have taken this trade. I should have got this entry. I should have had more contrast. You want to keep everything positive. You want to keep it real, right? Realistic, but you don't want to beat yourself up. You want to keep it positive because what that's going to do is help train your mind to see these things as they're happening real time. And if it's communicated in a positive way, it's going to be more helpful for your mind to retain it. Then from here, refining down into the 5-minute chart, same deal. 9:30 drop into sell side below the midnight opening price. Then they leave buy side here, this pre-market high, and then the daily levels that we're looking for the market to trade up into. And then lastly, we have the 1-minute chart. So this is again a refinement. The markets are delivered top down. So we start with the higher time frame, then we can make sense of the lower time frame when we understand what the higher time frame should be doing. So here we have the 9:30 opening price. The market drops at 9:30 below the midnight opening price and that midnight opening range. The market then crosses this order block. That is a change in the state of delivery. And then the market trades bullish. And that's what I'm doing to backtest the current trading day. And then the last thing I'm doing is I'm reviewing trades. So the 4-step process that I'm doing Monday through Friday is, in summary, reviewing the trading plan. Did I follow it? I reflect on my performance. I backtest the current trading day, and then I review my trades. So now that I've already done the backtesting, I'm then putting the executions on, and then I'm logging what it is that I'm doing. So trade 1, I went long inside the lower half of the first presentation, expecting it to act as an inversion fair value gap to send the market higher. So I locked it about 45 points into the opening range high. The reason I took off the trade there was because I just had one contract. So I'm annotating what I'm doing, why I'm getting in, right? Why I'm looking for specific things. Now I know this may seem like a lot to do each day, but once you get consistent with it, it only takes about 45 minutes to an hour. About 45 minutes to backtest the day, spend around 5 minutes on each time frame, and then you only spend around 10 to 15 minutes reviewing the session in terms of breaking down what you were doing, reflecting on what you did, what you can improve, what you were seeing, and then it just takes a few minutes to review the trades. And this takes about an hour long. So it's really not that long. If you're serious about trading, an hour should be nothing for you to dedicate to this, even with the busiest of schedules. I have traders I work with that are full-time business owners, are in university, work full-time jobs, and they're still able to do this every single week. So there's no excuse why you can't either. And I'm still doing this every week. So it's not something that I'm just saying, here, do this because it sounds good. I'm still doing this as a full-time day trader. So I use this to get to this point, and I'm still doing it to keep me where I'm at and to reach new levels. So from here, I want to go into what I'm doing in terms of weekend reflection. So at the end of each week, like I said, this could be done any day. You could do it Friday, you could do it Saturday, you could do it really any day. But the big thing is you want to reflect each week. And then what you want to reflect on is, what did you learn this week, right? It's like, what did you take away from the markets? What was a big learning experience that you had for that particular week? Then from there, you want to go into what was difficult. What did you struggle with? And then as you start being aware of those things, you can study them. And then over time, as you study them, you're not going to have as much difficulty with the things that you're struggling with. So over time, that's how you're going to get better at trading, reflecting on what was difficult, what did you struggle with, and how are you going to improve it going forward. And then from there, what were the main takeaways, right? So if you're working with a mentor, someone that's coaching you, what were some of the main things that you learned that week? If you're working with someone who knows what they're talking about, you should be learning every single day you're in the charts. So what were some of the main takeaways that you had from a particular week? Note those things down, because then in a couple months, couple years, when you're reflecting back on what you're doing, or even just in a few weeks, you're going to be able to reinforce what you're learning. And that's how you get good at doing this. It's done through repetition. And then lastly, how did you improve, right? So what made you better this week? What did you learn that made you better? What experience did you go through that's making you more of a professional? What are things that you're doing that improved you this particular week? This should only take 15 to 20 minutes. It's not that crazy. What did you learn this week? What was difficult? What were the main takeaways, and how did you improve? And if you do that consistently, you're going to create an awesome journal log and data that you can look back on to see how you're growing, where you're improving, and then you're going to be saying, man, I can't believe I struggled with that a year ago. And now it's going to be totally clear. And you're going to be able to see how much you've grown by doing this every single day. Now, this may seem like a lot, but this is why so many traders are losing money. Most don't know what to do, and those who do are too lazy to roll up their sleeves and get to work. Don't let this be you. So when you really think about it, most people are going to give 8 hours a day to some bullshit job that they don't even like. But to give 2 to 3 hours to building your future self, to building your empire in trading is too much. That's such ass backwards thinking. And if you really want this bad enough, if you want to become successful, you have to be willing to sacrifice other things. Football on the weekends, going out, drinking, partying. You have to sacrifice things to become successful, right? So I'm not saying it's easy, but this is a process that you could do every single week, and it absolutely works. It will make you successful, but you have to roll up your sleeves and get to work. I'm not telling you to do anything I didn't do to get to this point. Trading is a high-paying profession once you acquire the skills. This is how you acquire the skills. Like any other high-paying profession out there, right? If you want to be a pilot, what do you have to do? Learn in the classroom, practice on simulation, a demo account, right? And then from there, you're going to go into flying an actual plane. But there's a process and years of study to get to that point. Same thing with a doctor, right? They're starting in the classroom. Then they're cutting on cadavers, a demo account where there's no repercussions for the decisions they're making. Then from there, they go into live surgery. But it takes years to get to that point. Trading is no different. You can make a shitload of money trading, more than any other career, because there is no ceiling on what you can make in trading. But you have to acquire the skills to get to that point. If you do this routine every week using this template, in 3 months, you will make much more progress than many of you who take 30 trades a week, gamble on new strategies every day, and trade all day long thinking it will make you better. I was there. I was in your shoes, learning new strategies all the time, trying to trade different things all day long on the charts, right? So I'd spend 6 to 8 hours on the charts just trading. Whereas if I would have just spent 1 hour, 2 hours trading, and then another hour or 2 hours doing what I'm saying here, I would have gotten profitable much sooner. And I would have shaved years off my learning curve if I just wouldn't have done the dumb shit. But I didn't have anybody telling me, this is dumb shit, do the right thing. And my goal is to share this with you so that for your trading, the next 3 years or the next year doesn't look like the last year or the last 3 years. If you want the full Notion template that I just shared here, join our Discord to get access. Our education channel also shares educational posts every single day of the week to help you with your journaling and learning. So this is an example of something I just shared that this particular week for me, I didn't do a whole lot of trades. I had things going on in my personal life. The little puppy wasn't feeling well. It's the summer month, had a lot of other things going on in terms of business. So I only took one trade, which was a winner on Monday, and that was all I did for the entire week. And I just wanted to share that trading less doesn't mean you're falling behind. It's usually one of the first signs that you're developing discipline. And then I share a little bit of personal experience that due to personal matters in the summer months, trade frequency was very light this week. And I wanted to share this with you all because it took me a long time to get comfortable not always being in a trade, right? Not always gambling, not always going to the casino and needing to roll the dice. And once I was finally able to overcome that and get disciplined, I was able to become a professional that was able to make consistent money. So this is just one of the examples of the things that we're sharing in our education channel, designed to help you improve your journaling and your learning from traders that actually live from this and do this every single day and are in the trenches trading, looking to make money just like you are. So if you want this insight, join our Discord. The link will be below. Hope this one was insightful. If there's any other videos that you'd like to see, comment down below, and I'm excited to make them for you.